Hello everyone. Welcome to the Stock Minds web channel. Meta Platforms Inc., NASDAQ, Meta, the parent company of Facebook, Instagram, and WhatsApp, has demonstrated robust financial performance in the first quarter of 2025, with significant year-over-year growth in revenue and earnings, coupled with strategic investments in artificial intelligence and augmented reality. Meta Platforms poised to make a good growth. In this video, we will dive into Meta Platforms' recent earnings, stock performance, growth potential, and the risks investors should consider. About Meta Platforms. Founded in 2004 by Mark Zuckerberg, Meta Platforms Inc. has evolved from a social networking site into a diversified technology conglomerate. The company operates several major platforms, including Facebook, Instagram, WhatsApp, and Messenger, serving over 3.4 billion users worldwide as of March 2025. Beyond social media, Meta is investing heavily in AI, AR, and virtual reality, aiming to build the next generation of digital experiences. Meta Platforms' financial performance. In Q1 2025, Meta reported revenue of $42.31 billion, a 16.07% increase from $36.45 billion in Q1 2024. Earnings per share (EPS) rose to $6.43, up 36.52% from $4.71 in the same quarter last year. On a trailing 12 months TTM basis, revenue reached $170.36 billion, a 19.37% year-over-year increase from $142.71 billion, while EPS climbed to $25.59, up 47.45% from $17.35 the previous year. Free cash flow per share (TTM) also improved by 6.92% from $18.78 to $20.08. Meta's profitability metrics remain strong, with a gross profit margin of 81.77% and a net profit margin of 39.11%. The company boasts a return on assets (ROA) of 17.88% and a return on equity (ROE) of 39.83%, indicating efficient use of assets and shareholder equity. With a debt-to-equity ratio of 0.27, Meta maintains a conservative capital structure. Over the past 5 years, Meta Platforms' revenue has grown at a 17.6% CAGR, net income at 20.9% CAGR, and free cash flow at 23% CAGR. Meta Platforms has been able to grow consistently after the business declined in 2022 due to the U.S. economic contraction. Meta Platforms' 2025 financial forecast. Analysts forecast Meta's revenue for 2025 to be $185.62 billion, a 12.84% increase from 2024's $164.5 billion. EPS is projected at $24.75, a 3.71% rise from $23.86 in 2024. The average analyst gives strong buy rating with price target stands at $685.33, suggesting a potential upside of 24.83% from the current share price. But I think the revenue and EPS targets are too conservative, as Meta has consistently exceeded those targets, which is a positive sign. Meta stock price performance and valuation. At the time of making this video, Meta Platforms stock is trading at $549 per share, reflecting a strong 27.6% gain over the past year, well ahead of the S&P 500's 10.4% increase during the same period. Over the last 5 years, the stock has delivered a remarkable return of 171.4%, significantly outperforming the S&P 500's 96.1% gain. Meta also provides a modest dividend yield of 0.38%, offering an additional benefit to shareholders. From a valuation standpoint, the company appears reasonably priced given its strong growth trajectory, with a trailing 12-month price-to-sales (PS) ratio of 8.54 and a forward PS of 7.54. Its price-to-earnings (PE) ratio stands at 23.24 on a trailing basis, while the forward PE is 22.57. The price-to-free cash flow (PFCF) ratio is 26.38. If we look at the valuation over the past 5 years, Meta forward PS is above the average of 6.38 and forward PE in line with the historical average of 21.95. While the forward PS is above the average, but the forward PE, which is on the average historical level while projected to grow, makes Meta still an attractive stock with good valuation. Meta Platform's growth potential. Meta's growth is driven by its dominant position in digital advertising and its strategic investments in emerging technologies. 1. Family of apps and reality labs. Meta's family of apps, FOA, continues to be the company's primary profit engine. In Q1 2025, FOA generated $41.9 billion in revenue and $21.8 billion in operating income with a 52% margin. Meanwhile, Reality Labs, RL, posted only $412 million in revenue, down 6% year-over-year, and an operating loss of $4.2 billion. Despite these losses, Meta views RL as a long-term bet on the future of AI and the metaverse, especially through devices like smart glasses and the Quest 3S. User growth and engagement. Meta's user base is still expanding, with 3.43 billion people using at least one of its apps daily in March 2025, a 6% increase year-over-year. Engagement is rising, driven by AI-powered recommendations that boosted time spent across Facebook, Instagram, and Threads. Threads saw a 35% jump in usage and reached over 350 million monthly users. Messaging and AI platforms are also thriving, with WhatsApp surpassing 3 billion MAUs and Meta AI nearing 1 billion users. 3. Advertising business trends. Advertising made up 97.5% of Meta's revenue in Q1, totaling $41.39 billion, a 16% increase year-over-year. Revenue was well diversified across geographies, with the US and Canada leading at 39.2%. Despite spending cuts from some Asia-based advertisers, overall demand remains solid. However, regulatory risks in Europe could impact ad revenue starting Q3 2025 due to changes required by the EU Digital Markets Act. 4. AI, infrastructure and metaverse investments. Meta is aggressively investing in AI and infrastructure, spending $13.69 billion in CapEx during Q1 and raising its full-year forecast. This includes expanding data centers to support AI models like Llama 4 and building toward general intelligence. AI already contributes to better ad performance and user experiences, with strong adoption of Meta's creative tools. In hardware, Meta is seeing growing demand for Ray-Ban smart glasses and Quest headsets, positioning Reality Labs for future relevance. Risk to consider. While Meta's prospects are promising, investors should be aware of potential risks. 1. Regulatory pressures in Europe. Meta is facing significant regulatory challenges in the European Union. The European Commission has criticized its ad-free subscription model under the Digital Markets Act (DMA), leading to a €200 million fine. Meta plans to appeal this decision, but if upheld, it could necessitate changes to its business model in Europe, potentially affecting user experience and revenue from the region starting in Q3 2025. 2. Reality Labs' ongoing losses and uncertain ROI. Meta's Reality Labs division, responsible for its metaverse and AR or VR initiatives, continues to incur substantial losses. In Q1 2025 alone, it reported a $4.2 billion loss, contributing to cumulative losses exceeding $60 billion since 2020. Despite these figures, CEO Mark Zuckerberg remains optimistic, stating that 2025 will be a pivotal year for the metaverse. However, the long-term return on investment for these initiatives remains uncertain. 3. Macroeconomic factors and advertiser demand. Economic uncertainties, including new U.S. tariffs on Chinese imports, have led to reduced advertising spending from Chinese e-commerce companies like Temu and Shein. This decline in ad spend from key clients could impact Meta's advertising revenue, especially if such macroeconomic conditions persist or worsen. 4. high capital expenditures, and operational risks. Meta has increased its 2025 capital expenditure forecast to between $64 and $72 billion, primarily to support AI infrastructure development. While these investments aim to bolster long-term growth, they also pose operational risks, including the challenge of effectively managing and integrating large-scale AI projects. Additionally, the company's workforce has grown to 76,834 employees, reflecting a significant increase that requires careful management to maintain efficiency. 5. Competitive landscape. Meta faces intense competition from other tech giants in both the social media and AI sectors. Platforms like TikTok, YouTube, and Snap continue to vie for user attention and advertising dollars. In the AI domain, companies such as Microsoft and Google are making significant strides, potentially challenging Meta's ambitions in AI-driven products and services. Despite these challenges, Meta's strong financial position, innovative initiatives, and expansive user base position it well for sustained growth. Conclusion: Meta Platforms Inc. has demonstrated strong financial performance in Q1 2025 with significant growth in revenue and earnings. The company's strategic investments in AI and expansion into new revenue streams underscore its commitment to innovation and growth. While potential risks exist, Meta's robust fundamentals and market leadership make it a compelling investment opportunity. But remember, this is not a financial advice. What do you think about Meta Platforms? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.